Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of the labyrinthine world of corporate filings and by law, spill the beans. Today we are diving deep into Middlesex Water Company's latest report, focusing on their financial performance. Middlesex Water Company, a name that sounds straight out of a classic novel, is actually a pretty important player in the water utility sector. Imagine a company responsible for keeping the taps running and the pipes flowing for thousands of people. That is Middlesex. They're in the business of water and wastewater services in New Jersey and Delaware, and they operate under the watchful eyes of state regulators. This means their financial health isn't just about profit, but also about pleasing government bodies and, of course, their customers. So let's see what the numbers are telling us. First up, let's peek at their income statement. For the third quarter of 2025, their operating revenues were about $54 million, slightly down from $55.1 million in the same period last year. Over the 9 months of 2025, revenues were $147.7 million, an increase from $144.7 million in 2024. It is a bit of a mixed bag here. Revenues are up for the year so far, but the latest quarter shows a slight dip. Digging into those revenues, the regulated part, the core water and wastewater business, makes up the vast majority. For the first 9 months of 2025, regulated revenues hit almost $139 million, while the non-regulated bits, like contract services, brought in about $9.5 million. Now let's talk expenses. For the 3 months ending the 30th of September, 2025 operations and maintenance expenses were $23.7 million, down from $25.3 million in the same quarter of 2024. This decrease is attributed to things like higher capitalizable costs, which means more money spent on infrastructure being treated as an investment rather than an immediate expense, and lower legal and regulatory costs. But it was also partly offset by higher energy costs and more repairs due to weather. For the 9-month period, these expenses were up slightly to $67.9 million from $67.6 million in 2024. So they're managing costs, but weather and other external factors are definitely playing a role. Depreciation, which is basically accounting for the wear and tear on their massive infrastructure, increased to $6.9 million for the third quarter of 2025 from $6.3 million in 2024. For the 9-month period, it jumped significantly by about $2.2 million year to $20.2 million. This increase is mainly due to more money being invested in their utility plant, which makes sense given their focus on infrastructure upgrades. Interest charges, the cost of borrowing money, went up for the third quarter. It was $4.2 million, an increase from $3.4 million in 2024. This rise is mainly due to more debt outstanding. For the 9 months, interest charges were pretty stable, around $10.5 million in 2025 compared to $10.7 million in 2024. And the bottom line, net income. For the third quarter of 2025, it was $13.9 million, a slight decrease from $14.3 million in 2024. For the 9 months, net income was $34.2 million in 2025, down from $35.5 million in 2024. While the regulated part of their business accounts for most of the income, the non-regulated part, though smaller, showed a slight increase in net income for the 9 months. Let's switch gears and look at their balance sheet. This gives us a snapshot of what they own and what they owe. As of the 30th of September 2025, their total assets stood at a massive $1.34 billion, up from $1.25 billion at the end of 2024. A huge chunk of that, over $1.1 billion, is their utility plant, which is their water systems and infrastructure, after accounting for accumulated depreciation. This number has grown significantly, showing their commitment to investing in their core assets. Their current assets, which are things they can convert to cash relatively quickly, totaled $49.6 million in September 2025, up from $42.9 million at the end of 2024. This includes things like accounts receivable, which is money owed to them by customers. Now for the liabilities and equity side, their total capitalization, which includes equity and long-term debt, was $834 million in September 2025. Up from $799.7 million in December 2024. Common equity, which represents the owner's stake in the company, grew to $482.5 million from $445.2 million. This rise is largely due to retained earnings, which is the net income the company has kept over time, and also new common stock issuances. Their long-term debt stands at $350.1 million as of September 2025, a slight decrease from $352.8 million at the end of 2024. It is interesting to see they are managing their debt levels, likely a key part of their financial strategy. Moving on to cash flows, this tells us how money is moving in and out of the company. For the 9 months ended the 30th of September 2025, cash provided by operating activities was $44.1 million, an increase from $37.3 million in 2024. This improvement is a good sign, driven by rate increases and lower tax payments. On the investing side, they used $76.2 million for utility plant expenditures in the first 9 months of 2025, a big jump from $49.4 million in 2024. This aligns with their capital investment strategy, including the acquisition of new water systems. In financing activities, they saw an increase in cash provided, reaching $32.9 million in 2025 from $16 million in 2024. This was mainly due to higher short-term borrowings and more proceeds from issuing common stock through their at-the-market equity offering program. Looking at equity, we see how the owner's stake has changed. The balance of common stock and retained earnings has steadily increased over time. For example, the balance at the 30th of September 2025 for common stock amount was $269.6 million and retained earnings were $212.9 million. Their strategy of issuing common stock, like the $16.9 million in net proceeds from their at-the-market program in the 9 months of 2025, is clearly contributing to this growth. Now, let's touch on some recent developments. A big one is the perfluoroalkyl substances, or PFAS, multi-district litigation settlement. Several of their utility subsidiaries are involved in lawsuits concerning these chemicals. They have received initial settlement payments, which they plan to use for the benefit of their customers pending regulatory approval. This shows they are facing environmental challenges, but are working towards resolutions and potentially recovering some costs. They also completed the acquisition of water utility assets from the town of Ocean View, Delaware, for about $4.6 million. This is a strategic move to expand their service area. And speaking of environmental challenges, the US Environmental Protection Agency, or EPA, has finalized new drinking water regulations for PFAS. This means water systems, including Middlesex, will need to monitor and potentially invest in treatment technologies to meet these stricter standards. This is a significant upcoming cost and operational challenge. Let's look at how their business is broken down into segments. They have a regulated segment, which is their core water and wastewater business, and a non-regulated segment, which involves contract services. In the first 9 months of 2025, the regulated segment generated $138.5 million in revenues, while the non-regulated segment brought in $9.1 million. The regulated segment is clearly the engine of their business. Regarding liquidity, Middlesex has access to significant lines of credit totaling $148 million. As of the 30th of September 2025, they had outstanding borrowings of $55 million, leaving them with substantial available credit. This is crucial for managing day-to-day operations and unexpected needs. Now, my take on this: Middlesex Water Company is in a stable, albeit heavily regulated, industry. Their financial performance shows steady revenue generation from their core regulated business, with ongoing investments in infrastructure being a major theme. The slight dip in quarterly revenue and net income might raise an eyebrow, but the year-to-date figures show growth. Their ability to manage operating expenses while facing rising costs and weather impacts is commendable. The key challenges ahead are the increasing capital expenditures needed for infrastructure upgrades and compliance with new environmental regulations like PFAS. They are also actively managing their debt and using equity offerings to fund their growth, which is a common strategy for utility companies. The acquisitions they are making seem strategic, aimed at expanding their footprint. Overall, Middlesex appears to be navigating a complex environment by focusing on essential services, infrastructure investment, and regulatory compliance. The path forward will likely involve careful cost management and continued engagement with regulators to ensure they can recover their investments. Alright, that is our breakdown of Middlesex Water Company's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments if this analysis was valuable. Hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description for more discussions and community engagement. Thanks for watching, see you next time.